indeed. We're going to talk about venture capital and the role that it can play investing into psychedelic medicine. And of course, a big part of that is mental health as well. Gives me great pleasure to welcome Stephen Hayes from What If VC. Stephen was kind enough to place on his Stickler podcast, quick plug there, quite recently, talking about what we've been doing in psychedelic medicine at the Conscious Fund. And Stephen, maybe just by way of an introduction, a little bit about What If, your own personal journey in terms of how you decided that this was a very important category for you. And then we're going to sort of free flow in terms of how as venture capitalists we feel we can add some value and not just capital to this emerging category.
Yeah, thank you for having me. It's a pleasure to be here. Kind of the brief version of my bio and background is, I went to West Point here in the U.S. I was in the Army for a while, and I ended up getting an MBA at Vanderbilt. And then I had a 7-year career as an investment banker on Wall Street. And then, after that time, I started my first venture fund. I ran that for about 3 years. And at the end of that period in 2018, I ended up going to rehab for addiction. So I went to rehab in the summer of 2018. When I was there, I was diagnosed with bipolar disorder. And when I got out of rehab, I kind of wondered if I was the only person like this. I mean, I wondered if there was anybody else like me. Is there anybody working on this problem? And I eventually found my way to some entrepreneurs who are building mental health startups. And I ended up starting to wonder, could I build a venture capital fund focused on mental health startups? Because from what I could find, there wasn't one. There wasn't one dedicated to mental health at the seed stage. There were a lot of investors that have invested in digital health or some other kind of health startup thesis, if you will, but nobody solely focused on mental health. And I went out to try to raise a fund, and I found quickly that people had a hard time giving $20 million to somebody who'd been sober for 6 months at the time, which I guess I probably should have seen that coming. And one of my investors said, hey, why don't you start a syndicate? So I started What If Ventures as a syndicate, which is what it is today. Started back in January. We had about 15 people that were willing to look at deals with us back then. And fast forward to today, we've invested in 7 mental health startups. We've deployed $3.3 million into the space since January, and we've got about 2,100 limited partners, if you want to call it that. I mean, these are people who look at our deals with us, and they opt in or opt out of each deal as we bring them to market.
It's just another planet.
Yeah. Thank you. Just being asked by somebody in the Stephen Hayes and What If VC, and I'm going to introduce Ruth very, very shortly. Who's just having a few sort of technical issues getting back with us. Stephen, I think one of the things that I've always admired, and as I've been getting to know you, is that you're very, very open about your personal journey, and the challenges that you faced. Do you think in some ways you've been unfairly sort of treated because of the fact that you've been very open? I mean, you're ultimately out there fighting the cause for mental health, something I personally and passionately believe in. But does it not strike you as somewhat perverse that you get held back and ostracized?
Yeah, I mean, it's sort of two sides of a coin. I find that there's a lot of people who want to help because they believe in the social impact of what we're doing. But at the same time, there are a lot of people who do, want to bring up my past and say, I don't want to work with you because you're not perfect, or I want to define you by what you were 3, 4, 5 years ago, and not by what you've decided to be today and what you've demonstrated over the last 2 years in sobriety. So yeah, I run into friction, both with some founders and some investors, for sure.
Okay, well, thank you for your candidness and your openness, and I think that's one of the things we really wanted to bring out on this panel is really, what we do as venture capitalists. As some parts of the psychedelic community are very, very concerned, I think, about VC getting involved in the category, and part of what I wanted to sort of bring out today was just that human side in terms of why we've all decided apply our skills to psychedelic medicine. Now we seem to have possibly lost Ruth again. the joys of technology. So we'll keep free flowing. You've made your first investments into psychedelic medicine companies. Can you share a little bit about what was going through your sort of your thought process into those companies and who those companies are?
Yeah, totally. And I noticed a question in the chat about past experience and selection of companies that'll actually be answered as part of this. So, I, as somebody who spends a lot of time thinking about how we can help people, I evaluate all of the opportunities in the space based on what I think could have helped me and what I think could help other people that either I sponsor in Alcoholics Anonymous, or that I help out at my church, or that I help in another recovery program. And, when I stumbled across what was being developed in the psychedelic space, I started hearing words like cure and long-term effectiveness. And I started seeing statistics and data that showed effectiveness of treatment being not just a little bit better than CBT or SSRI assisted CBT, but I started seeing multiples, 100, 200, 300, 600% improvement in effectiveness and duration of the impact of treatment. And I mean, as somebody who lived through something that almost killed them, that caught my eye and made me want to dig in. And so I started looking for opportunities to invest in the space. And my first opportunity was to invest in that convertible note round that Atai did recently. So I did that. Just invested in Field Trip Health, closing an investment next week in a Y Combinator current batch company that's doing some basically EMR for psychedelic assisted treatment centers. So yeah, it was all driven by my personal desire to find and fund things that I think would have helped me or people like me.
Fantastic, thank you, Ruth. I'm not too sure if we've got you on the line, because currently I've got you in I've got a frozen version of you. Looks like you're quite startled.
Oh dear.
Fantastic. Hi. Now, Ruth, you're not a venture capitalist, but you work very, very closely with venture.
That's right.
And you've also been an operator and an investor. So. I'm curious. Tell us a little bit about your background and what's sort of drawn you to psychedelic medicine.
Sure. So I'm a lawyer by training. So apologies to those who want to make the lawyer jokes here. But really, the way I view my role is as a problem solver and as a people connector. So those are the two things that I'm really, really good at. When I moved back to Canada from overseas, where I used to do natural resource work in Africa, I got in touch with a client who got me into cannabis, and I did not grow up wanting to go to law school to be a weed lawyer. And here I am during a pandemic now, taking, a psychedelics company public, invested in various privates, looking at interesting companies like Entheon, for example, and merging my interest in human behavior and law and, finding good solutions for people. So having been in cannabis for several years, which makes me a grandmother in terms of the industry, and taken a company public very successfully and had an exit, I was in a good position and had met lots of people and really learned from my successes and failures in cannabis, and was able to connect with a lot of like-minded people. I don't think I speak for just myself when I say I think addiction and mental health surrounds everybody, right? It's 1 degree removed. It's not several degrees removed from everybody. And I think with the momentum of what's been happening in this very unique year, the conversations for mental health are ripe for having for lots of reasons. And I think, this culmination of this psychedelic renaissance and this openness to talk about mental health has really created a platform. My sweet spot, so I'm a sole practitioner. My sweet spot is really working with business people and taking them to the next level of their company. So they come to me with what they want to do, their business ideas. At the same time, they might be going to Stephen for a pitch. And then we figure out, what's the business, what's the story, and, what's the solution to what they need to do, whether it's raising financing or going public. So I help them with all of those things. Fantastic.
And you touched on there, in terms of what is the pitch and what is the story. And Stephen, when you're evaluating deals, you quite openly talk about things which could have sort of helped you and on your own sort of personal journey. But what is the best way? I mean, in terms of getting a fund like yours, interested and excited in investing in a company outside of them not necessarily knowing about your own sort of personal journey.
Yeah, I think the most important thing is the team. You need to have a team in place that can build a business. And if you're doing the right things, if you're going about this the right way, it's pretty easy for investors like us to find you if you have a great team and a good idea and you're going to market in an intelligent way. How to actively get in touch with investors and appear to be ready to be funded. I mean, to me, it's all about communicating a clear story, clear vision, and having a problem that's worth solving in front of you, and having a solution that solves the problem with a clear value proposition, and articulating that effectively and efficiently and concisely to investors.
And I mean, and I guess one of the things that you do far more often than you say yes as a VC is you say no. What's your way of sort of saying no to someone? Because given the impact of this category, and have you ever sort of said no and then had sort of FOMO, shall we call it, after you've said no?
I've said no a dozen times to an entrepreneur and then invested, and then I had an exit in that company. So I mean, yes, I say no all the time. And ways of saying no, I mean, I say no in different ways. Sometimes I just say it's too early. Sometimes I say, I'm not comfortable with this or that. And, it is what it is. I mean, you got to pass on some deals. Sometimes we pass on good ones. Sometimes we pass on bad ones. Never going to get it right 100% of the time. It's really a matter of, doing your best to evaluate the team and trying to give a little bit of constructive feedback. But again, at the same time, can't always, founders will always want to hear, a bunch of constructive feedback. But if I take the time to do that with 1,000 founders, I'm not gonna have time to do my job, one, and two, they're all gonna argue with me. So a lot of times when I pass, I just don't write back, or I say it's too early, just because I can't engage in giving everybody deck feedback. I don't have time for that.
Yeah.
Yeah, it's always a difficult balance to make. Ruth, now we were talking yesterday when I had my power cut, and I have nothing but technical dramas at the moment, and we were kind of really we're having a bit of a laugh, I guess, in terms of the way that the Canadian capital markets work versus let's call it the rest of the world, and what's been your sort of experience in terms of how deals tend to sort of come about in Canada, and then maybe we can touch on the nuances of not necessarily taking that model to non sort of Canadian capital allocators.
Yes. So from a Canadian perspective, one thing that's very common in capital raising is having what's called a lead order. So you want to be able to boast and say that we've got so-and-so influential or significant shareholder in our cap table. And so you've got one person, and then, what's now called FOMO will then attract additional investors to come in. And Stephen, we had the conversation of your model and how it's not about having, one chunky investor to be the lead, and how you've really democratized fundraising. So Stephen, maybe you want to talk about that, but definitely in Canada, like that's sort of the flavor, is to really have a lead investor who you can use to really market your deal.
Yeah, I mean, in most of the seed, Series A, and later deals that we do, there is a lead investor. It's some venture capital fund that writes the lead check, negotiates the docs, sets the standards, and drives the deal with a term sheet. For us, we take an allocation and we distribute that allocation to our investors and let them take little pieces of it. So I'm not looking for a lead within my syndicate. My average check within my syndicate is about $12,000 across all the deals we've done. So we have a lot of small check writers who've never had access to the venture asset before. They could never write, well, some of them could, but most of them could not write a large enough check to get into a venture capital fund. So what we do is we bring them access to those deals at much smaller checks, and we bundle all those checks and take them and put them into one entity and invest out of that entity as one single investor onto the cap table of these companies.